Hi there, good morning. You're watching Market Cafe on ET Now with me, Snehisha, and with me today is Jessica, who's first time on the show. Jessica, I hope you're excited.
Thank you.
It's a lovely show, and this is how we're going to welcome the viewers into a brand new and fresh trading week. Well, the GIFT Nifty looking strong as of now, looking at least decent and above that 24,350. Let's see if we're able to sustain to those levels. But on that note, then let's kickstart the show, take you through what the global handover has been looking like over the course of the weekend, and we'll be taking you through everything that's been happened over the course of the weekend, right from the closing bell on Friday till this moment. So let's get kick-started. On that note, I'm going to take you through everything that's been up with the global markets, and let's start with what the US has been up to, because right now futures looking rather stable for the US. If you take a look at all three indices on the spot basis, you have Dow that was up 0.4% on Friday, you have S&P 500 up 0.5%, and Nasdaq 0.8% higher on Friday. So rather solid moves coming in from Wall Street, and overall also it's been a very good month coming in. If you take a look at the November month and the November moves coming in, Dow 7.5% higher, you have S&P 500 5.7% higher, Nasdaq also 6.2%. So decent moves coming in, and of course the rally was entirely because of the election that we've seen, and the uncertainty is now put to rest about who's going to be the next president of the United States. So all of that has been settled, and the moves are following a winning week coming in for the stocks. Much of November trading, like I mentioned, was centered around that president-elect Donald Trump emerged as the winner. Now, indeed, November has marked the best month of 2024 for both Dow and S&P because stellar moves coming in. Both the indices have also notched an all-time intraday and closing highs in Friday's shortened trading session. Remember, Friday was Thanksgiving in the US. On the back of that, the trading session was shortened, but nonetheless, you have the Dow and the S&P 500 that have outperformed the street. Special focus now and special mention for the small cap stocks. They were also a winner in November as the group benefiting from Trump's potential cut rates. Russell 2000 has surged more than 10% in this month, and that's quite interesting to know because if you take a look at our markets also, the Nifty small cap 100 has outperformed the mid cap as well as the street. Now, investors will be watching out for some key economic data on manufacturing and construction spending today. That comes ahead of a series of closely watched labor data that's going to be due later this week. And in fact, this week is going to be a very data-heavy week, not only for the US but also globally, because you have the PMI numbers also that are expected globally today. Now, all eyes are also going to be on Christopher Waller and New York Fed President John Williams' speech today. So lots of important commentary coming in from the US markets as well as the Fed today. Now, if you take a look at what the bond yields were up to, bond yields have also seemed to have held up pretty well, 4.217%. Now, 10-year Treasury yield has slid to the lowest point since October on a holiday shortened trading day. So that's a move that we're seeing on bond. Now, let's shift focus and talk about oil then, because all eyes are going to be on that OPEC Plus meeting that's going to be happening on the 5th of this month. So lots to watch out for on that front as well. If you take a look at what WTI is up to, 0.2% uptick coming in, 68.14, so shy of that 70 mark. You have Brent, however, 71.95, so very close to that $72 a barrel mark coming in for the Brent, 0.1% uptick coming in on the Brent as well. And the oil has posted a 3% weekly decline as supply risks have eased. Everything that's been happening geopolitically has been taking its toll on oil indices as well. But the Middle East conflict has not disrupted supply, which is expected to be ample in 2025. Now, the IEA sees the prospect of more than 1 million barrels per day of excess supply, equal to more than 1% of global output. So, well, lots to watch out for on both of these fronts. But on that note, let's also take a look at all the important events to watch out for in today's trade then, Jessica.
Yeah, hi. So let's talk about global cues now. We have India manufacturing PMI, while US has ISM manufacturing going on with them. But if you move on to UK has S&P Global and CIPS UK manufacturing PMI. Eurozone, we have manufacturing PMI with unemployment data coming in, and China has Kaixin manufacturing PMI upgrade. And with the lock-in period ends, AFCON's infrastructure ends at a 5%. Other events that we have to look forward this week, we have the New York Fed President John Williams, who's going to later give a speech, along with the Fed Governor Christopher Waller to speak again. Now, next we have moving on to the global cues.
Absolutely. So lots to watch out for in terms of all the events to watch out for in today's trade as well. Let's start by taking you through the biggest global stories this morning. And you have President-elect Donald Trump. He has threatened 100% tariffs on BRIC nations, which is the Brazil, Russia, India and China. and others if they act to undermine the US dollar. The bloc has been promoting alternatives to dollar dominance, a process known as the de-dollarization, with calls for new payment systems and non-dollar trade. Now, Trump, in a fiery Truth Social post, warned any country backing a new BRIC currency would wave goodbye to the US market. Meanwhile, Russian President Vladimir Putin has accused the US of weaponizing the dollar, urging alternatives to bypass Western sanctions. Global economic tensions are rising fast.
All right, moving on to China. China's factory activity grew for the second month in a row, with the NBS manufacturing PMI rising to 50.3% in November from 50.1 in October. This marks the highest reading since April thanks to Beijing support measures. Output and new orders saw significant growth, but challenges remained with weak foreign orders and employment. Confidence improved to a 7-month high, reflecting steady economic expansion. However, the service sector stagnated, with the US potential tariffs posing new risks.
Okay, let's shift focus. Talk about Russia then. Russian President Putin has approved record defense spending, allocating 32.5% of Russia's 2025 budget, which is well over $145 billion towards the military as the war in Ukraine intensifies. Meanwhile, new European Union leaders Antonio Costa and Kaja Kallas visit Kyiv, pledging unwavering support amid concerns over shifting US priorities under President Trump.
All right, moving on to Ukraine. Ukrainian President Zelensky is urging US President Biden to rally support for Ukraine's NATO membership. As the members meet in Brussels this week, the move comes as Russia makes battlefield gains and Ukraine approaches the 3-year mark of the invasion. Zelensky acknowledged some NATO allies are hesitant but hopes the outgoing US administration can sway them.
Well, shifting focus to some corporate action, Stellantis CEO Carlos Tavares has resigned effective immediately. This comes just 2 months after a profit warning, with the company's value plummeting 40% this year. Tavares' departure was reportedly due to differing views with major shareholders and the board. An interim executive committee will take the reins until a new CEO is found in the first half of the next year.
Alright, protests erupt in Georgia over suspended EU talks, leaving 44 injured. In the capital, thousands clashed with police using water cannons and tear gas as tensions escalated. An effigy of ruling party founder was burned. Officials say 27 protesters, 16 officers and 1 journalist were hospitalized. The Prime Minister, Kobazidi, insists European integration is not halted but condemns blackmail and warns of strict actions against the lawbreakers.
Well then, shifting focus to a slight pressure point coming in for the Indian economy, because India's GDP for the second quarter of the current fiscal came in much lower than expected at 5.4%, also making it the slowest pace of growth in the last 7 quarters, which is also slower than the previous quarter, which was above 6%. Now, the GVA for the same period came in at 5.6%. Let's go across and hear in from Chief Economic Advisor Nageswaran, who calls this slowdown unalarming. He also negated the notion that this might turn into a trend. Let's go across and listen in.
Real GDP growth print of 5.4% in fiscal second quarter of the current financial year 24-25 is on the lower side. It is disappointing, but we would like to point out that it is not alarming situation. There are quite a few bright spots. In comparison to the expectations, it's on the lower side. And I think we are still doing better in comparison because the global environment was challenging in the calendar third quarter. And agriculture has done quite well. In fact, these are the bright spots. If you look at the growth rates year on year in the gross value added segment, agriculture, livestock, forestry, and fishing had a growth rate of around 1.7% in Q2 of last year. And then it was a very tepid 0.4, 0.6, and then 2%, improving to 2% in the first quarter of the current financial year, further picking up to 3.5% in the second quarter. That is a bright spot. The other bright spot is construction. We can see that construction sector over the last full year has been growing at very high single digits and continued that growth rate in the first half of the current financial year as well. These are the bright spots. The passenger vehicle sales in October helped the industry clear a lot of inventory. two-wheeler and four-wheeler sales, and domestic air passenger traffic handle has not only seen a level shift up in the volumes compared to the previous 2 financial years, but you can see the slight upswing on the right side of the right side chart in the green line in September and October as well. Rural demand has been a bright spot, as we have been writing in the monthly economic review, which we publish around the third week of every month. On the left side, you can see about 7 consecutive quarters of growth in rural demand based on the Nielsen IQ data, and two-wheeler and three-wheeler sales as well in rural India, while tractor sales is at an all-time high because of the expectations of a good Rabi crop on the back of a Kharif crop as well. There are enough reasons to believe that this 5.4% is one-off rather than the beginning of a trend.
All right, we caught up with economist Indranil Pan, who highlights a slowdown in the public as well as private expenditure contributing to the economic slowdown. Let's listen in.
So from the expenditure side, we can clearly see a slowdown in terms of the private final consumption expenditure. The government final consumption expenditure, which is its revenue expenditures, has actually sort of performed better in terms of the growth. The gross fixed capital formation, that has also sort of significantly moved lower in terms of growth. Now, the worry possibly comes from the capital formation. We were expecting that the government's expenditure, the capital expenditures will rise significantly post the election phase. That to a certain extent started to happen, but again, again it did sort of move lower. The steam that was being shown by the private capex, that also possibly is likely to have been weaker. On the production side, I think for me, actually, the worry is the mining sector, which is, the manufacturing sector, which is growing at just about 2.2%. We all know that the Q2 profitability of the companies had been lower, but I think the economists were expecting relatively a better number over there.
Okay, that's the word coming in from Indranil Pan, but let's also go across and take a look at what brokerage houses are making out of India's GDP September print, and my colleague Gaurav is joining us with all of those details. Good morning, Gaurav. Take it away.
Well, yes, we have already seen that GDP growth was lower than what the street was expecting, and after that we are seeing some kind of pessimistic view coming up from brokerages. So first we have got Jeffries, who is saying that September quarter was actually not a surprise in terms of when we talk about corporate results, because we have already seen some kind of slowdown. But what was surprising is that the government's capex has slowed down even in the month of October, which was a little concerning for Jeffries. What they're saying is that both these things are actually bottoming out, and that is the reason why we may see some kind of rebound coming up. They are what they believe is that the government capex slowdown and at the same time credit slowdown in the banking system is the reason why we saw this slowdown. But at the same time, they also believe that H2 could be better. Other than that, when we talk about HSBC, what they're saying is that RBI cuts will start from, the rate cuts will start from February, but we may see some kind of liquidity easing coming up in the month of December from RBI. Other than that, when we talk about Bank of America, what they're saying is that they've actually lowered the FY25 GDP growth estimate, which were given to them almost at a higher rate to around 6.5% for FY25, and what they are saying is that the services and public capex are actually the reason why we saw some kind of slowdown, and at the same time industry has gone in a decline trend, and that is the reason why this slowdown was there. When we talk about Bernstein, what they are saying is that RBI is likely to get more comfortable with the policy actions, but when we talk about rupee, we may see some kind of weakness, and that is the reason why the pace of cut has to be moderated from RBI. And at the same time, when we talk about equity markets, now Bernstein believe that equity market is likely to grow higher than the 7% GDP growth rate that we're estimating for the India. And at the same time, what they say is that they stay neutral in Nifty, but believe that the wider exceptions of slowdown would be a better sign of bottoming out. Lastly, we also have Morgan Stanley. They have also cut down their market estimates for GDP growth to 6.3% for FY25 versus what it was at 6.7%. But at the same time, they also believe that this is not something that is going to happen in coming quarters as well, and H2 could be better. So definitely a little bit of disappointment is what we have seen for the print of second quarter of FY25, but definitely brokerages are saying that H2 could be better for India.
All right, thanks Gaurav for that. Moving on, the goods and services tax revenue in November grossed over 1.82 lakh crore rupees, the fourth highest monthly collection ever. It crossed the 1.80 lakh crore mark for the fifth time in 88 months since July 2017. Despite major states such as Andhra Pradesh, Rajasthan and Chhattisgarh showing a dip in growth, meanwhile the net collection after refunds saw an 11.1% jump at 1.63 lakh crores due to a strong domestic business activity as compared to external sector growth. Overall, the first 8 months of the financial year have now recorded a 9.2% growth in net GST revenues that stand at almost 12.9 lakh crore rupees.
Okay, that's the latest GST print coming in from across the states and overall India as well. But on that note, we'll slip into a very short break on this edition of Market Cafe. You stay on with us because when we return, we'll take a look at how the Asian markets have opened up this morning. So you stay tuned. Hi there, welcome back. Thanks so much for staying tuned to Market Cafe. You're watching ET Now. Let's take a look at what the Asian indices are up to right now. And Asia Pacific markets have kick-started a data-heavy week, mostly higher, while investors are awaiting economic readings from several countries, including Japan, South Korea and China. On that note, let's start with China because you have the PMI data that's come out. Like we mentioned earlier, manufacturing PMI is at 50.3, its highest level since April, beating the 50.2 expectations polled by Reuters. Manufacturing PMI also came at 50.1 in October, so above 50, looking good. Hang Seng reflecting that. You have 0.8% higher. Let's pull up Shanghai and take a look at what Shanghai is doing because that's the index that's in focus if you're talking about. 0.5% uptick coming in on Shanghai as well. So both Shanghai, Hang Seng holding up pretty smartly. Let's shift focus then, talk about Australia because that will be announcing its retail sales for the fourth quarter. ASX 200 started the day with an uptick of 0.2% and continues to hover around those levels. Not much happening. 0.2% uptick coming in on ASX as well. Let's move on then, talk about South Korea's Kospi. That rose 0.5% on open. However, it has reversed those gains and rather it's 0.5% lower as we speak. Pressure building up on the Kospi as we speak. Now over the weekend, South Korea's preliminary trade data revealed exports grew at their slowest pace since September 2023. So on the back of that, you can see some pressure building up on Kospi as well. 0.6% lower is where that index is. Let's also take a look at what Nikkei is up to. That's Japan's index. That was the only outlier in Asia, falling 0.5%. Now that's also being joined by Kospi. But you have a slight recovery coming in, 0.3% cut coming in. But well, yes, it's a 120-point rough cut coming in on the Nikkei as we speak as well. Let's shift focus back home and take a look at how we shut shop on Friday. Nifty closed at 24,131 level on the spot, implied at 24,358, a very solid, gap up open is what is expected for us this morning. 230 points roughly higher on the spot is where we're expected to start. And on the futures, you have a 0.2% uptick coming in on that front as well. So looking pretty solid for us. Global cues are also looking supportive. Let's just buckle up and hope this trade day holds positive moves for our markets today.
All right, now let's get you what's lined up for the market show today. Merger with Quality Care at 8:30 a.m. with Alicia Mupen, Deputy MD of Aster DM Healthcare. Moving on, we have Beat the Street at 9:20 a.m. Prateek Agarwal, Executive Director of Business and Investment Strategy, Motilal Oswal AMC. Next, we have Growth Roadmap 9:30 a.m. with Anuj Kumar, the MD and CEO CAMS Real Estate Trends. Moving on, we have 9:40 a.m. Amit Kumar Sinha, MD and CEO Mahindra Lifespace's new acquisitions. Next, we have 9:50 a.m. Nitish Mittersain, JT MD and CEO Nazara Technologies Macro Setback. 10 a.m. we have Bri Prasanna, Group Head Global Markets, ICICI Bank, November Auto Dispatches. 10:20 a.m. we have Mayur Milak, the Senior Vice President Auto and Aviation at Asian Market Securities Private Limited.
Okay, lots of market voices and managements lined up for you all throughout, so stay tuned to ET Now. But on
All right, and welcome back to the Market Cafe with me, Jessica Trivedi and Snehi Shah. Moving on now, Aster DM has announced its merger with Quality Care India, and that has helped Aster Care cement its position as one of India's top hospital operators. ET Now's first broke the news on August 26th. Let's go across to Anurag Joshi, my colleague, for more details on the same.
hospital chains Aster DM and Quality Care India, which operates the care hospitals chain, are merging. According to the merger agreement, Aster DM chairman Azad Mupin will remain the executive chairman of the merged entity for 3.5 years, and subsequently he will become the non-executive chairman. Aster DM founders and Blackstone, which owns care hospitals, will jointly control the merged entity. Blackstone had last year bought care hospitals and owns 75% equity stake in care hospitals. ET now had first broken the story on August 26, detailing the terms of the merger, and we had also reported that Blackstone will be the largest shareholder in the merged entity. And on November 8, we followed up with another news break where we reported that the merger deal will be closed by the end of November, and both Aster DM founders and Blackstone are in the last legs of completing the deal. Now, according to the deal, the Aster DM shareholders will be roughly will be holding about 57% equity stake, while Quality Care India shareholders, that includes Blackstone, will be holding the balance 47% equity stake. Now, in the merged entity, Blackstone will be the biggest shareholder with a 31% equity stake, and Aster DM founders, they will be holding about 24% equity stake, and the remaining will be held by the public investors and the institutions. Both sides are now hoping that they will be closing the deal by the third quarter of FY26. Both Quality Care India, Blackstone and Aster DM founders will be having 3 seats each on the board of the merged entity.
Okay, then Gautam Adani has finally responded to allegations by US authorities related to the $265 million bribery scheme. At an award ceremony, Adani said that his company is committed to world-class regulatory compliance and added that this is not the first time they have faced such challenges. Let's go across and listen in.
January last year, just as we were getting ready to launch our follow-on public offering, we faced a short-selling attack initiated from abroad. This was not a typical financial strike. It was a double hit targeting our financial stability and pulling us into a political controversy. All of this was further amplified by certain media with a vested interest. But even in the face of such adversity, our commitment to our principles remains strong. After successfully raising 20,000 crore rupees from India's largest ever FPO, we made the extraordinary decisions to return the proceeds. We then further demonstrated our resilience by raising capital from several international sources and proactively reducing our debt to EBITDA ratios to below 2.5 times, unmatched metric in the global infrastructure space.
All right, as optimism around the growing banking sector is growing, experts see opportunities in consumer-focused lending and diversified financial institutions. From PSU banks to private lenders, the sector appears poised for steady growth amidst robust demand. Let's listen in to what Hartmut Isel from UBS Wealth, Ashish Gupta from Axis MF and Vikas Kimani from Carnelian Asset have to say on this.
consumers at zero growth, for me, that's a very clear opportunity here. Financials also, especially banks, right, have been a bit of a laggard for the longest time. It's also, right, I think the softest point for them.
I think in financial, the trend is quite clear that really the banks are holding up much better than NBFCs. We are also seeing diversified non-lenders continuing to do well. Whether they are capital market companies, platform companies, and even insurance companies. I think large banks and insurance companies within the financial pack look the most interesting to us besides the platform companies.
My opinion, where we found good, bets on especially PSU banks and some of the banks where, without much change in the business, dynamics, you've seen good 40% kind of 30 to 40% kind of corrections. We find that pocket very interesting, and that's where we've done a little bit of shopping.
Okay, well, on that note, we'll slip into a very short break on Market Cafe and keep it going with more stock-specific news and updates on the other side. So you stay tuned. We'll be right back. Hi there, welcome back to Market Cafe. Let's keep it going with everything that's important to watch out for in trade today. And now we have my colleague Ansh standing by with an F&O snapshot. And Ansh, brand new trading month coming in, a new series starting. Tell us what are the levels that we should be spotting today?
Right, Sneha, let's start with what FIs did in the previous session. On long side, we are seeing that they have covered some longs, they have covered some shorts as well. So this is the positive side because net to net, we are seeing addition of around 3,000, almost 500 contract on upside. Due to which the total long position has gone up slightly from that 32.8% to 33.1%. Now, if we see Nifty, then if you can see the Nifty chart, Nifty has been holding about that 20 DMA from last 5 to 6 sessions, and that 20 DMA is around 24,000 marks. So unless until we don't give a decisive breakdown, we can expect some positive hopes in the market. Also in index front, we are seeing in index future open interest has gone down by around 3%, indicating short covering, again a bullish sign. Whereas on option front, we are seeing very active call buying happening at that 24,400 strike, indicating option traders expecting Nifty to go above this level and sustain there. If we talk about Nifty Bank, then Nifty Bank actually has been taking strong resistance at that 52,500 mark from the start of October itself. So we need to give a good breakout to be on a positive side. Unless then we can see some consolidation to a bit of a bearish sentiment here. Also on index option, we are seeing highest total open interest at 52,500, indicating resistance around this level. So keep an eye on these levels.
Alright, the F&O universe has expanded to 223 stock futures after the addition of 45 stocks on Friday, including popular names like Zomato, Jio Financial and DMart. And take us through all the actions that they saw.
Right, so together this 45 stocks have added, and the total single stock future is at now 223, and this 45 stocks have accumulated around 3,400 crore of open interest base. And interestingly, top 10 stocks actually have contributed the most, almost 60% of this total open interest addition, and the top names for which are Zomato, Jio Financial, LIC, Adani Green and BSE. Now if we talk about open interest positioning, then 25 out of 45 stocks have showed some short side buys, indicating bearish sentiment in the market. And this notable names on the bearish side are Zomato, Poonawalla FinCorp, Avenue Supermart, Paytm and Yes Bank. This indicates that traders are getting a bit cautious on the stock. But on the positive side, we have Jio Financial, LIC, Adani Green, BSE and HUDCO, which has attracted good positive momentum in the market. Now looking at the overall market impact, this new addition currently represents just 1% of total SSF open interest base, which is expected to grow eventually. Also, the inclusion of Zomato and Jio Financial into this F&O segment increases the chances of getting into Nifty 50 index inclusion, which will be happening in the March 2025 review.
Thanks so much for taking us through all that. So lots of stocks to watch out for on the back of how they've acted on that F&O action. But let's take it across to my colleague Ria also, who's standing by with a list of all the stocks to watch out for in today's trade. Ria, good morning. Thanks for joining us bright and early. Take us through what investors need to be keeping their eye out on today.
Yes, good morning. So let's take a look at the stocks that are going to be in focus today. We have a lot of order wins coming in. First up is KEC International. Now they have won new orders worth over rupees 1,000 crores in their international T&D segment. There's also Cochin Shipyard, which has signed a contract with the Ministry of Defence of India for a short refit and dry docking of a large Indian naval vessel, and the estimated contract value is above 1,000 crores, and the duration for this project is around 5 months. We also have RVNL, which has emerged as the L1 bidder for an order worth over rupees 643 crores. There's also two pharma stocks in focus today. The first one is Biocon. Now the US FDA has approved Biocon Biologics drug called Yesintic BMAB 1200, which is biosimilar to J&J's Stellara. We also have Zydus Wellness in focus since they have completed the acquisition, the 98.14% acquisition of Natural India Private Limited, and the remaining stake is also going to be acquired soon. Lastly, also keep an eye out on Sarveshwar Foods. Now, the board has approved the acquisition of the remaining 55% stake in the UAE-based company called Natural Global Foods DMCC, and the stake is now going to increase from 45% to 100%. The acquisition will be completed by the 31st of December 2024, and the company is going to establish a regional hub in the Middle East for rice and rice-based products through this acquisition. So keep an eye out on all of these stocks today.
Yeah, thanks so much for taking us through everything that we need to be keeping a close eye on in today's trade. But yet another stock that's going to be in focus is HUL. Remember, on Friday they had their capital market day and lots of key takeaways coming from it. We told you on Friday what the management is eyeing, but here's what the brokerages are also making of it. Let's start by looking at what Goldman Sachs thinks about this, and they've maintained a neutral rating with a target price of 2,775. They believe it's a holistic plan to rapidly grow the portfolio and address affluent India. They believe HUL is dialing up product superiority across the portfolio, so that's looking good to Goldman Sachs. And they believe that these are market makers because they've targeted growth of 1.5 times of category driven by inflection points across categories. Coming to UBS now, they've maintained their neutral rating. However, they've cut the target price to 2,800 rupees from 2,950 earlier. They believe that the management is optimistic on the medium-term growth prospects of India. Each business segment seems to have a distinctive role in growth, is what UBS is flagging out. And they also believe that HUL expects near-term demand to remain stable. This is something that the management also highlighted on Friday. Now, if you take a look at what Morgan Stanley says, they've maintained their underweight rating with a target price of 2,110 rupees per share. They like the shift in management style from assertive to aggressive, but they think it's a multi-year task to fulfill the plan. Now, they believe that the beauty and wellness strategy is well laid out. They will require some strong execution and innovation, and GTM and consumer connect as well. So that is something that they're worried about. They believe that food and nutrition market share and profitability will lead growth going ahead. Lastly, let's also take a look at what Axis Capital is making of HUL. They've retained their ad rating and maintained the target price at 2,850 rupees per share. They believe that near-term demand and margin outlook remains stable. The reach of 9 million stores, 35 distribution centers and 3,500 plus redistributors are looking good right now. They believe that there are 19 brands with more than 10 billion rupees of turnover. Over 85% of the business enjoys category leadership. So this is also something that they are liking going ahead. And they've also said that the management has indicated that the ice cream business is projected to grow in double digits. Remember, very recently the management has announced to demerge their ice cream business, and they believe that it has a premiumization opportunity with low penetration on a per capita consumption basis. That's a lowdown of what brokerages are making of HUL's capital market meet that was held on Friday.
All right, let's look at the brokerages on financials. Investec has maintained a hold on the RBL Bank, while Jefferies has maintained a buy stance on Bajaj Finance. My colleague Gaurav here has more details with both on the notes.
Well, yes, RBL Bank is going to be in focus because when we talk about brokerages, we are seeing some kind of target price cut from the brokerages. So first, let's talk about Investec, where they have maintained hold rating but cut the target price to 170 rupees. What we have seen in that, the Bajaj Finance are now cut ties with RBL Bank for credit card. What now Investec is saying is that the RBL Bank's termination of the co-branding is going to be one of the things which can actually dampen the share price, and at the same time they see some kind of corresponding decline in net interest income, and at the same time we may also see some kind of decline in the estimates for the bank. Apart from that, they also remain cautious on the RBL because of the large exposure to MFI that the bank has, and that is the reason why we are seeing this target price cut down. We also have IIFL, who has also cut the target price to 180 rupees versus what it was at 195 rupees. What they are saying is that the Bajaj Finance co-branding can actually have a limited impact on RBL's credit card segment, but at the same time, again, MFI segment is something that needs to be looked out for, and that is the reason they are also being pessimistic. On the other hand, we have Bajaj Finance, where Jefferies has actually maintained buy rating. and a target price of 8,400 rupees. What they're saying is that they are actually Bajaj Financing is reducing scope and concerns which are related to the credit card segment. In the medium term, we may see some kind of impact, but that is going to be limited in terms of earnings. And at the same time, they also see some kind of limited risk when it comes to flexi loan book operations for the bank, and that is the reason why they are being a little bullish on Bajaj Finance. So definitely watching out on both these companies on the back of the new development that we have seen in this weekend, over the weekend. Yeah.
Thanks, Gaurav, for that. So Bajaj Finance and RBL Bank going to be in focus on the back of brokerage radar. But let's shift focus and talk about the entire auto basket of stocks, because it was another mixed bag for auto dispatches in November as passenger vehicles continued to see robust growth for the year but lagged sequentially on the back of festive-based effect. CV sales, however, remained muted along expected lines, while two-wheelers were largely steady. My colleague Shrishti, who tracks the sector closely, is joining us with the highlights of all the auto sales. Shrishti, good morning.
Good morning. Firstly, let's talk about the auto sales data. Then definitely, yes, we are seeing a mixed set of numbers this time, but majorly on the expected lines. But yes, indeed, there are some outperformers. So let's check out that. Firstly, from the passenger vehicle space, it's Maruti Suzuki that is leading from the front because the numbers were above than what we were expecting at ET. Now, 1.8 lakhs of units is what the company has registered for the month gone by, and that's a 10% jump on a YY basis. But when it comes to Tata Motors passenger vehicle, then it's quite a muted set to just 2% growth on a YY comparison. But for Hyundai Motors, there's a decline of 7% on a YY basis, and the numbers are also below than what we were expecting at ET. Now, in the commercial vehicle segment, no major trend to catch up, and that's what we have been highlighting, that from the commercial vehicle pack, there's no much expectation that we are building in. But from the two-wheeler segment, do watch out for TVS Motors because that company has registered a jump of 10% on a YY basis. Definitely, yes, outperforming the peers. And when it comes to Eicher Motors, Royal Enfield, there's a 2% jump on a YY basis, but Hero MotoCorp numbers have definitely disappointed because there's a decline of 6% and the numbers were actually below than what we were expecting at ET now. But from Escorts, the numbers were largely in line. The company clocked sales of close to 9,000 units, a tad bit lower than what we were expecting, but nevertheless, the commentaries seem to be on the positive side. So those were the highlights from the auto sales data. Back to you.
All right, thank you so much for that, Shrishti. Now with that, we bid you goodbye, but stay tuned to ET Now as the market is up next.
If you like this video, then like, share and subscribe to ET Now.